Global markets sinking after a significant rise in cases outside of China, including Italy and Iran. The total death toll now stands at nearly 2,700 people. The news further increasing worry that the economic disruption of the outbreak may have a wider impact than initially expected. With us to discuss all of this is Kathryn Vera, Baltic Chief Global Market Strategist and Head of Research Strategy. Good to have you here. Very simply put, at what point do investors need to back off and just wait this out? Are we there?
Well, if back off means completely sell your positions, I would say we're not there. The duration of this virus, now seemingly pandemic, is what will determine, the economic impact ultimately. What I can tell you, of course, no one knows how long it's going to last, but what I can tell you is that really unless it's going to end the world as we know it, which seems like, a stretch, you will eventually get a sharp recovery, which is what the market has been banking on up to today. So the duration is what's worrying, and the expansion and the contagion. So the impact will be significant. We have the SARS epidemic back in 2002, 2003 as an example. The impact on China's economy will be important, and the impact on the global economy will be significant as well, given the increase in importance of the Chinese economy, which is now 20% of global GDP.
Kathryn, it's Julie here. Good to see you. So we're seeing, obviously, the effect not just be felt in stocks, it's being felt across different kinds of assets, in commodities, in bonds as well. Are you in the camp that says maybe we should be leaning towards fixed income to kind of wait out while there are so many unknowns right now?
Yeah, I would say just hold your positions right now, especially when you could get a double whammy, Julie, between coronavirus scares and the lack of really containing the virus, with the potential for a Sanders sweep next Tuesday, which I think would only aggravate the current sell-off. If, in fact, the market doesn't react to a Sanders sweep, which I think is fair to say would be an anti-market candidate, then I would be recommending the purchase of put options based on that risk alone from here to November, because I think there's an expiration date on that specific complacency. So, yeah, look, I think there's going to be short-term downside risk. I would say hold on, hold steady. And if you have puts, hold on to those put positions. There's a lot of risks on the near-term horizon.
Great, Kathryn. The question I had for you is, when I looked at the impact to Apple, I estimated about a 4% hit to sales on the notion that it was limited to loss to Chinese sales to Chinese consumers and supply chain disruption in China. How do you think about pent-up demand versus lost sales, depending on how long the coronavirus outbreak lasts?
Well, sure, the demand component is going to be the most hard hit, and Apple feels the effect of that, which is why you see the XLK and Apple itself down 3 to 5% just today alone. So unequivocally, I would say that the primary impact on the Chinese economy will be on consumption and on transportation. We're already seeing that. So people are staying in their houses, they're not going out, they're not traveling. So that will be the primary impact, but that's also where I see opportunities. So if you get something similar to the SARS collapse, which took the market down 25% from 2002 to 2003, if in fact you get something like that, then I think you would want to be looking in those most hard-hit sectors, which I would add are the sectors that are the fundamental long-term drivers of growth, the fundamental long-term drivers of growth for the Chinese economy.
I mean, that's where I was going to go, Kathryn, which is the flip side. We're all talking about fear, but what about the greed? In other words, at what point do you as an investor look to get in? You talked about some sectors there. Can you elaborate a little bit more on that?
Well, that's the reason the markets haven't responded up to now, because everyone was buying the dips, right? So that's why the markets are just starting to kind of react to the coronavirus. And so I would think that you may not even get to that 25% correction that we saw back in the SARS epidemic. But we could get there, as I previously alluded to, with the potential for the market getting spooked by a Sanders nomination. It's just one of the near-term clouds on the horizon.